Welcome, everyone, to another episode of Down But Not Out. Today, I'm joined by Ryan Austin. Ryan is the founder and CEO of Synapse, a Toronto based learning and development operations software that has offices in the US, Mexico, and Africa. A longtime entrepreneur, Ryan has started several companies dating back to 2005. Right before starting his current company, Ryan exited Go Fish Cam after successfully building the company from 2014 to 2019. Ryan, thanks for being on the show.
Thanks for having me, Nick.
Absolutely. And I'm not sure if my introduction sufficed, but please go ahead and give us a bit of your background leading up to Synapse and your Down But Not Out story.
Yeah, no problem. I would define myself as an entrepreneur first. I wasn't very good at school. I tried university for 3 years and it just didn't work out for me. And I kind of turned my dorm room into this like mini campus shop and got in trouble and had to figure out like, okay, well, how do I do this? So that's when I built my first tech company because I took everything online and it's been kind of a journey since. One company led me to working at a company called World Trade Group, where at the time I noticed that this company's competitors offered corporate training services and they didn't. So I pitched the board. I was leading a few sales teams. I pitched the board on building a new revenue stream for them, and became senior vice president of Training Americas, and that's how I kind of by default fell into learning and development and learned about that.
Awesome. And then I mentioned Go Fish Cam. Where was that in the journey? Was that part of another, like, was that while you were doing this other job as well, or how did that fit in?
Yeah, so uh, after prior to joining World Trade Group, I started a company and ended up didn't working out.
Yeah.
And so just to save up again, I joined WTG World Trade Group, and they were later acquired by private equity. And rather than sifting through the changes, I did really good. I did really well building out this new revenue stream. So I kind of built back up where I felt comfortable to going back to entrepreneurship. I felt that I got some new learnings, etc. And at the time, I wanted to get back into tech, but I wasn't yet sure what I wanted to do. So I started consulting and learning and development because I knew how to make money there just as a cash flow business, and figured that I would help companies. You know, we built out a corporate training services company. I co-founded it with somebody named Josh and started building it out. And it was more of a cash flow company. It wasn't recurring revenue, so like every month was a new month type of thing. Hard business to build.
Yeah. Yeah.
Um, and I started looking at investing in diversifying. And I went to actually a wedding with a friend's wedding, and I had a friend named Reza, and he's like, "I really want to be an entrepreneur." I'm like, well,
Yeah.
let's come up with ideas on this trip. And we were on this catamaran, and I grew up as a like an angler. I love fishing, and we're back at a catamaran. Everybody's partying, and like the local catamaran staff members, they were fishing off the back while we are going back inland, and they caught this fish and it got off the line, and they're like, "Oh, I wonder what it was." And I'm like, "Well, what if you could see underwater, with some sort of camera?" And so then I went to Reza and I'm like, "Hey, Reza, um, this is the idea. We did research. We didn't saw people like the competition was people like welding go GoPros onto fishing lures and stuff
Yeah.
like that." And then we're like, "Okay, there must be something here." And so Reza was an engineer, so he started building like prototypes out of like the Raspberry Pi and stuff like that. And it was like, nothing to what it ended up being. But came to the time where Reza and me had to put money in to take this prototype to actual like proper prototype. And he basically got cold feet. and was
Yeah.
like, you know what? I can't invest that much money into building this. Like, it's too much for me. And I'm like, oh, Reza, like, this is what entrepreneur. You say you want to be entrepreneur. It's about taking the risk. You gotta commit and figure out the pieces after. But got cold feet and bailed. And I already signed a contract to get this prototype built with an engineering firm. And coincidentally, around that time, my brother Brandon was graduating university, and you know, came to me and he's like, "I want to be an entrepreneur." And I'm like,
Does
"Okay."
everyone come to you and say that?
No, but I'm happy to for the right people to like pay forward, give
Yeah.
help out where I can. I got a lot of help from mentors along the way. My brother's like, want to be an entrepreneur. Graduated university in Ottawa, and I'm like, well, what are you gonna do? And he's like, I'm not sure. And I'm like, well, I have this Go Fish Cam thing, and I'm like, it was never meant to be my full time job. I'll give it to you, and I'll
Yeah.
invest a bit to get it going, and I'll teach you how to fundraise and all of that, and you operate it, and I'll like teach you how to be a CEO essentially. And so that was a deal. And he came and moved and slept on my couch and built Go Fish Cam. And several years later, we sold the company. So it's a pretty cool story.
Uh, but Go Fish Cam was almost, I wouldn't say, yeah, it was definitely in trouble after your engineer left. And you didn't really want it as a full time job, and your brother just so happened to be at the perfect time to take it over. Were you a part of daily operations still there? Were you running the consulting firm?
Yeah, I was running the consulting firm because, my thesis with the consulting firm was to actually learn about problems in learning and development, to find a tech play because the learning and development function was so behind other functions in like just digital transformation or how modern teams operate, etc.
Yeah.
And so I was still digging into that, and so I was more of an advisor, like CEO coach to my brother,
Yeah.
and like an investor, and just taught him what I knew. There was a lot of yelling, and but it worked. It was a good formula. Like, brothers can build businesses successfully because it's so hard getting to these yelling matches. And which leads me to, you asked me about telling the story with and so the one I chose was, with Synapse. So Josh and I started this, and Josh is like one of my best friends to date still, right? And
Yeah.
so we started this consulting company, started making money from it, and I was never content running a services business, and so even though we were running it and we made it successful, we got it to a few $1 million in like 12 months. And I was just never satisfied. Like, I was not like, hey, this is like what my life is or the mission I want to be a part of. So I was okay to kind of let everything go and pursue the next big thing. We got into some accelerator based off of some, like, this thesis around potential software we could do. And I moved to New York and then eventually to Texas. And we were doing the services and trying to figure out the tech thing at the same time. And at some point we said, okay, we think we know what we want to build. We need a tech co-founder. So we got introduced to somebody in Texas named Sebastian. And, he kind of joined up. And so, Josh, Sebastian, and I kind of went off and started working to build this prototype. And at the beginning, everything's so exciting and whatnot. And then, reality sets in. Building tech companies is really, really hard, right? And you have to not pay yourself longer than you thought it would take, right? What you thought might take 3 months of not receiving salary or a payroll could be like 12 months or 24 months. And so it becomes really hard. And, you have to make choices like, where am I going to pay rent from? Like, in my case, I had a line of credit. And so I was using that. And, I was and Josh had some income and Sebastian had some income, and we pay ourselves where we can. This was pre like product, right? Like, we
Yeah.
were building the product, so we didn't even have sales. But we eventually got to a point where we started sales, but this was like a very early version of the software. We're selling to enterprises. The people who were buying from us were first mover innovators, like untraditional enterprise buyers, and um, we didn't have funding, so we early days, and so we were like borrowing money against contracts and then paying off those loans like 30 days after because of net 30 payment terms to pay engineers and salaries or whatnot. And we weren't sure if we'd be able to raise money with this company at some point. We needed to, because we needed to get ahead of like the company needs and whatnot. And it was a hard time. I mean, we had to make hard decisions to the point where Josh and I both agreed that we had complementary skill sets. And, if we were trying to figure out how do we survive another day, we recognize that probably both of us, it didn't make sense for both of us to be in the company. And like, this was a friend who moved to from Canada to the US. We co-founded another company together. We built this together. And, yeah, and we kind of had to like look at each other and just be honest. And so,
That's a tough
well,
conversation.
for sure.
Yeah.
And we and the conversations get way tougher, right? So we mutually kind of talked about it, and unfortunately, um, like well, Josh and I both agreed that I should stay on and he'll leave, and we ended up doing a deal where he ended up going and running the services company. We stopped doing services when we launched our software. We said we can't do both, and so
Yeah.
we said as hard as it's going to be, like he can't do services and software together for our business model. And so we just needed to like rip off the band-aid. And so he left, and I stayed behind with Sebastian, and we tried to get it to a place. We still had no money. We weren't paying ourselves. We were paying the engineers. And at some point, Sebastian said, like, he was 10 years older than me and wanted to have a family and stuff, and said, um, like, I can't do this anymore. So I have to figure out, like, you know, uh, where do we go from here, or like, how do I make income, or whatnot. And we're kind of striking out at the time with investment. Like we raised a little bit of angel money, but
Yeah.
wasn't like significant. We were close to the end of that, and that money needed to be to the engineers because it was like the fiduciary responsible thing to do was to keep like always make sure you're keeping the lights on and paying your people versus yourself sometimes, right? And so, um, long story short, we decided that the company should move to either New York or Canada, and that's where we should set up shop. And
You're in Texas still
um,
at this point.
yeah,
Yeah.
exactly. And we got, you know, uh, I knew a group called the DMZ in Toronto, and they're like, "Come here, we'll help you, give you some office space, etc. Help you tap into some of the mentors, figure things out." So Sebastian was supposed to move to Canada, and then like a few months after I moved down, basically said like, "Hey, look, like, I don't think I'm going to move. Want to be with like grow my family here in Texas, talk to my wife about it, and like I have an exciting offer from Amazon, and at my point in life it sounds like I should just go and do that." So ended up being like me plus like now, two co-founders down,
Yeah.
me and like four engineers in Mexico, and
And you're not
Sebat
technical in that sense either, right?
no,
You just
no,
lost your
no.
CTO. Yeah.
Oh yeah.
Yeah.
So now I'm like, company has like 10 customers, four engineers, no technical co-founder, like barely any money. And it's like, hey, how do you figure it out from here? So
Yeah.
heads down and just did what I know best, like sales, 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 sales. And so I moved the company, I moved to Canada unofficially back at the end of 2018 just to see how things would go.
Yeah.
And I sold my socks off. Um, and I got the company to a pretty interesting level where we started having money and could hire somebody. So right away, I was close with Sebastian. There was no hardship. Right away, uh, talked to him to help me recruit for a technical uh, head of engineering, and we ended up finding somebody named Lumi who joined us at the time as like VP of Eng, and he started managing the team, and then we started building it out from there. But now we got to some interesting numbers where it was like, okay, we have a new technical person in place, and those were like hard 3 months, like
Oh
on the
yeah.
personal side it built a lot of pressure in my marriage, my wife, it was like very emotional personally and business wise, and just had to figure it out. Life throws curveballs at you, and it, sometimes you just have to look at it and be like, this won't defeat me. And like,
Yeah.
you won't know how to overcome it. You won't know what to do. But you just take it day by day and try and figure it out and control what you can control. And it's super stressful, right? But um, just that belief and being persistent, and you never know what's like around the corner, like what can happen. Anyways, we did these speed dating things at this DMZ place, and I met a VC who got interested, and then they dug into us and realized that we had a really messy cap table, obviously, two
Yeah.
co-founders and
Did
whatnot.
you keep
So
did they retain all ownership, Josh and Sebastian, afterwards, or was there some divesting of shares that had to happen? How did that work?
yeah, so I actually I got some advice from uh, other story, but through Go Fish Cam, I connected with like Kevin O'Leary at some
Yeah.
point, like from Shark Tank, and
Yeah, that's
um,
cool.
I met one of his fund like heads, and they're in Toronto, and went for lunch and told them about this issue, and he actually recommended something that ended up working, which I would recommend to any co-founders dealing with something like this, which
It's a
was,
good lesson. Yeah.
we didn't have the money to pay out Josh and Sebastian um, all at once. Like we were just barely making it by, and obviously they participated in the company up to a certain spot. So we got some data points around like what could the company's valuation be, and basically structured a deal with them where we'd pay them that portion of money times their equity, but we
Yeah.
vested it like a mortgage over 25 years.
Yeah.
So monthly, we'll start paying you monthly
Yeah.
this amount of money over 25 years, but with accelerants. So if we raise the seed round, we'd accelerate X% of that. When we
And
raise
the
our Series A round, we'll accelerate another 50% of what's outstanding. When we raise our Series B round, we'll pay the remainder off. But in exchange, you have to give back sell the equity back to the company
yeah, that was my
on
question. Yeah. You're not
on like
purchasing it
this
back out of the
severance.
company. Yeah.
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 And well, at the time it was just me, right? So
Yeah.
like plus some of the angel investors who like got topped off because of it, but primarily I was the major shareholder, so it mostly came back
Yeah.
to me at the time because we're in the early days. You can structure it different ways. Obviously, it gets more complicated as you have more shareholders or investors or whatnot. But um, depending on how you're performing, I guess
Yeah.
dictates your negotiation power, right? So,
No, I think
so
that's a good takeaway if you need to get rid of a co-founder or two and they want to exit early on.
yeah, and I wouldn't say get rid, and I know you didn't intentionally mean it like that,
Yeah.
but I'm
Well, some
sensitive
people
about
need
the
to, not you.
yeah,
Right? Yeah.
I'm sensitive about it because again, Josh, like one of my best friends, and like
Yeah.
this was a very hard decision for all of us and Sebastian, but that was like hard conversation number 1,000, but for the sake of this story, number two, because it was like the company's paralyzed. We can't raise money with the cap table as is. So either I walk away,
Yeah.
right, which I would prefer not to do, but the company's dead at this point,
Yeah.
or you have to do this. There's no can I keep a little bit and we do this. We have to like just do it super clean to give the company the best chance of succeeding with venture capital fundraising.
Yeah.
And at this stage, like several years into it, without like making money and living off savings, it was like I can't personally go on trying to run this. Like Josh is doing his new thing, Sebastian has a nice job. Like, I also have to be fair to myself in this circumstance and not put myself in a losing outcome where like I'm making an already very hard job even harder, right? Um so I was serious. I was about to
Yeah.
walk away from the company,
I,
and
that, yeah, even like you personally, you said it was messy for VCs as well. So this could have been a move that potentially saved the company from your own regard of wanting to stay in, but also you wouldn't have been able to really raise with
for
that messy.
sure,
Yeah. So
save
it's
save
a
the
smart
company
move. Yeah.
completely.
Yeah.
And it was a good win-win scenario where it was fair to the co-founders,
Yeah.
and to put, what's fair. So if the company didn't make it because it was treated as severance, they would have to get paid out before any investor. It's income,
Yeah.
right?
Yeah.
So it actually put them in a position to protect, like what they would be owed over anybody else, which was good for them too. And I felt good about that, even, right? Like,
Yeah.
if I don't execute well and I fail, you guys win and I lose.
Yeah.
But if I win, you also win, right?
Everyone wins. Yeah.
So yeah, I mean, it worked out. And fast forward, like we're like 40 employees now, and
Yeah.
starting to crush it. So
Where are you in your raising as well?
well, we're private company, so we're
Yeah.
still seed stage company, and
Yeah.
we were thinking of doing our Series A, but something else happened where we were. I can't really talk about it yet. There's going to
Yeah.
be an announcement soon, but we were able to get equity non-dilutive, and so I postponed that raise to, this was like substantial money without the cost of dilution.
Was it like
So
venture debt? Can you say that?
um, somewhat,
Yeah.
something to do with like the government and things like
Okay.
that.
I'm in London.
So
I'm in Canada too, so I think I have an idea
okay, cool.
of yeah, yeah,
Yeah, so I mean, put it this way, I got really good at doing grants during COVID,
yeah,
and kind of learned the ins and outs of that, and we've had fortunate outcomes, which is great. Like, we can invest back into Canada talent, and
yeah.
also build a global tech company at the same time. And so, yeah, I mean, so we ended up postponing Series A because we got some money, and like this year is our growth year. Next year will be our scale year. And, like I was with Josh over the weekend, and we were talking about it, and, having beers. So it's
Yeah.
fun to stay in touch and keep things fair, and be on good terms with people at the same time. But, like, face hardship and diversity in the eyes and say fuck you and survive.
Yeah, and that maneuver, that was a, I don't want to call it maneuver, but that tactic, that structure, that deal structure is really what saved the company. I think definitely important for
Yeah.
others as a takeaway.
So I think the takeaway is like, especially when you're facing hardship and you feel like things are dead, you really don't know what's on the other side. You can't be stupid about it. So if the market's not speaking to you and you're getting bad information and there's just nothing there, like, do what Kevin O'Leary says: take it out back and shoot it, right?
Yeah,
Like,
yeah,
kill the company, because time is your most valuable resource. As an entrepreneur, you'll do something next, right? And you'll take the
yeah,
learnings from that and apply it. If the market speaking to you is really, really hard, sometimes you need to be patient and be persistent. And this is like really hard stuff. Like, you get depression, you feel lonely, so just talk to people openly about what you're feeling. Try and get advice. It's not going to be solved overnight. It could take 12 months, it could take 24 months. Listen to the market. If the market's speaking to you and you believe in it, keep going, figure it out day by day, and at some point the magic will happen where things start to turn around, right? And if you look at a lot of the most successful companies, I know everybody here is like, this company's $1 billion, that's $1 billion. Like, there's a company called Docebo. It's a learning management system started by a professor um, in Italy, and they didn't do anything for like 8 years, 10 years.
Yep.
Like they had nothing, and now they're like a $3 billion company that's on the public market, right? It took them 12 years, 15 years, or something like that. So these things take time, and you just have to be smart enough to know what small data points you get at any given time, which, like, listen to the market and use the data to make your next move and figure out. And it's not going to come easy. You have to dig. It's stressful. It's like finding a needle in a haystack. But if you're persistent, you'll figure it out. And if there's something really there, it will end up working out. Right.
Yeah, I think
So
that's a fine balance between knowing if you have something and you need to wait, or if you need to take it out back and shoot it. So I
yeah,
think that's smart. Yeah, I think that's a good takeaway from everybody. And we're on a bit of a crunch, so we'll wrap it up there, Ryan. I appreciate you sharing your story. I hope everyone enjoyed this episode. If you did, leave us a review. Also, subscribe to the show to be alerted of new episodes, and like and share on social media. Help us spread the word of Down But Not Out. All right. Thank you, everybody. Thank you, Ryan. Bye now.
thanks, Nick. See you.